Hey traders, this is Shegun Chat 247. I train traders how to trade in harmony with the market. As traders, in order for us to trade consistently successful, we must understand the underlying dynamics of price movement. Another thing to note, however, is that there are many names for the same things in trading. So don't get confused about what I'm about to share with you today. So we're looking at the pound Japanese yen on the 5 minutes chart. I like to trade 5 minutes. Okay. The this pair, we've been looking at it for the last week and we've been trading it up and down. It doesn't matter. Okay. But I want to use this as an example because I believe this is actually a great example to demonstrate what I'm about to share. Okay. Also, as traders, we trade price. Okay, no matter what strategy you're using or indicators are always the derivative of price anyway. So we still trade price. You know, I've seen many people teach trading and they teach you indicators to buy the MACD crossover. I use indicators as well, so I'm not I'm not saying you can't use indicator, but every indicator you use is calculated from price movement. So I believe the best thing you can do for yourself as a trader is to understand the price itself. So what is price? Price is nothing but the collective perception of traders. Some people will say in order for price to go up or down, there must be an imbalance between buy and sell order. I believe that is correct, but I firmly also believe that without adequate or even a great understanding of the wave structure, you cannot understand price movement. What I mean by wave structure is this. So we have an example that I've just done on the paint here. So this is a wave, okay? These are waves. But from one low to high, from another high to low, we have internal waves and a major wave. Pullback, major waves, but in that major waves, there's internal waves. In order for you to trade consistently successful, you must learn how to count the waves. You must understand the characteristics that attached itself to each waves that you see on the chart. So I've labeled these charts just to save us some time. Okay. So we last week we posted a trade somewhere here. We took a sell, closed the trade. We actually bought again and sold. So for me, we can see here there's an information we derived after the Bank of Japan released the interest rate decision on Thursday. I believe I can't remember the day now. Okay, I think it was on Friday. Yes. So the move here already indicated to us that this high we can sell this high by simply no indicator is telling us that this information was derived by simply understanding what this trying to look for something, what these two stands for. Okay. And because this two was violated before the high was made, we have an information of what we want to be doing here. So this is another two here. Nothing has happened. Okay. We have four, which means something else. Okay. So for me, as a trader and also as an instructor, I always focus on the price. Anything else, if we have plenty of strategies or tools that we use, but the price must be your leading indicator. Okay. So, for example, this is the pound US dollar. We say price is the perception of the traders. I'm going to go deeper into that. At the low, which is 5, okay, if the sellers, you ask yourself, who are those people making money from this point to this point? Obviously, they are sellers. If this price at the low still represents a good value for them, they will continue to sell this price. However, if this price does not represent good value at this low, what they will do is they will take profit. They will start to take profit, and what you see is you start to see a pullback. Then we have a couple of references here when this price was coming down. We have what we call the structural point. Structural points are basically decision making points. Okay, there are decision making points where buying and selling or selling decision was made previously. With this downtrend move, the structures we have here are what we call the bearish structures. Okay, so we have structure 2 and structure 4. They both have different characteristics attached to them. Okay, so then we saw the buyer starts to come in. Okay, now the buyers, they now saw this price as a fair price and it represents good value for them to buy it, and you saw the price giving us a completed wave structure, and this price became too high here. The same thing that happened here to the sellers will happen to the buyers. At this 5, this price has become too high for the buyers. They start to take their profit because they've made some money and the price came down. So we count the wave again to the downside. What works on the upside works on the downside. Then we can see 0, 1, 2, 3, 4, 5. At the low this morning, the sellers that pushed this price to this low, the same thing that happened to the sellers here happened. It became too low, and they see this price as not a fair value price or a fair price for them. They start to take their profit and price starts to come up. So now this is where we are. Okay, we've counted the wave again. We are at the 5. So what does this 5 mean to us? This is a high. We don't know if it stopped there. Okay, we're selling now, but we don't know. Okay, this is a high. Okay? The only thing that tells us this is a high is because we counted the wave. We are not following a, a moving average or an oscillator. Those things are good stuff, don't get me wrong. Okay, but the primary determinant of what we should be doing is the price itself, because like I said before, price is the leading indicator. So we are at the high. Okay, we've traded the 4, which is a reversal structure. Okay, and like I showed you before in this wave structure chart, the same thing we have here. This is a swing down. This is a major swing down. Let's draw this. Okay, so we have a major swing up. That is a major swing up, which consists of 5 waves. Then we have a major swing down, which consisted of 5 waves. We broke. This is a structure. This is a bigger structure. Then we have another wave here, which consisted of 5 waves. We have another wave here, consisted of 5 waves. We now have another wave here, which consisted of 5 waves. So technically, this high to this low is one wave, followed by the pullback. If you look at the wave structure, a move followed by the pullback, then another move. So basically, what I've just done now, I am convinced that the high probability trade I should be taking is selling, because I have a break of structure here. A major structure was broken down. I've seen ABC pullback. My expectation is for a trend continuation. So how do we trade this? A simple approach is I like to use the Fibonacci, because that gives us a reference of the chart, and we have what we call the sell zone from here to here. Okay, that is our sell zone, and because we've already had the correction is valid, we have a 5 which tells us we are at the high. Now the job, my job has finished. I've executed the trade because I believe this is a high, and I'm going to start to manage my trade, because the there are still some buyers, they may feel maybe there's still more room for them to go up, they might push the price up. So I know, in order for me to remain a seller, price must not come above here. That is my risk. That is where I can say to myself, I'm happy to take the risk of 76 pips. Okay, that's the worst case scenario for me right now. Okay, but if I'm going to be successful, I actually have a target of the T2 here. Okay, let me just update this Fibonacci key ratio. So this is the target 1, this is the target 2. Okay, so if I'm risking that, I'm going to be looking to gain this much. Or we may, depending on what the price, how the price react when it gets to this point, we may have this area. So that is basically a simple anatomy of price action. Okay, you have to understand how to count the wave. When I say I train traders how to trade in harmony with the market, the only thing that allow or that gives us the possibility of saying that word or that statement is because we have learned over the years on how to count the waves. The wave count is not Elliott wave. This is a simple way of understanding what the price is doing. At the high, I want to be selling. At the low, I want to be buying. And if it doesn't mean, because we don't have a crystal ball, we don't know how many people are going to come in, at what time the banks are going to come in and say they want to buy more or they want to sell more. But at least you have a reference. Selling for us at this high is a no. Okay, the price could continue. We're not saying the price cannot go back up, but based on the information that the price has given us, we believed that this is a fair area. Also, because we have a structure here, this is a good area for us to sell the pound Japanese yen. So that is my short analysis and explanation of what price is and how we look at price from this perspective of price is always and always will be the perception of traders. The traders that we are talking about, they are not the retail traders or the so-called professional traders that have a couple of hundred of thousands in their account. In order for them to move the market, they have to they move the market with huge amount of money. Okay, and if we cannot do that, we have to to follow the truth of the market, which is the price structure. So my name is Shogun Chat 247. If you like this short video, give us a thumbs up and I'll catch you in the next video.